U.S. government thinks in the next election cycle. And that to me is despicable. I would put in here, Michael, that we need to have Congress take the SPR out of the ability of the president to absolutely use it as a political tool and treat it like a strategic oil reserve.
Yeah, I've heard both sides of the argument that the SPR is damaged. I've also heard from people I really trust who I would say are Trump fans that the SPR is not actually damaged and that that's part of the degradation of these salt domes is that it's just going to happen over time, whether or not they're filled or not. What's going on, everybody? Welcome into the Tuesday, May 13th, 2025 edition of the Daily Energy Newsbeat Stand-Up. Here are today's top headlines. First up, Saudi Arabia spends like oil still at $90 a barrel. Next up, Republicans push to refill the Strategic Petroleum Reserve with $1.3 billion in additions. Next up, Texas law aims to stabilize ERCOT grid by leveling the playing field among all power generators. Finally, we'll bump over to the UK. Can the UK avoid the Spain blackouts, or are they doomed? Stuart, toss it over to me. I will quickly cover what happened in the oil and gas markets and touch a little bit more upon the potential Shell BP merger. We've been talking about it for months now, and finally Reuters picked it up. So we will cover all that and a bag of chips. Guys, as always, I am Michael Tanner, joined by Stuart Turley. Where do you want to begin?
Hey, let's start with our buddies over there with Saudi Arabia. And this article is actually from Irina Slav over at oilprice.com. We love Irina and her insights. We love oilprice.com. And just let me go through these bullet points here. Saudi Arabia faces fiscal strain as Brent crude prices remain below the $90 to $96 barrel needed to balance its budget, with a projected 2024 deficit of 5% of GDP. Michael, holy smokes, Batman. Despite non-oil sector growth, Saudi Arabia's economy remains tied to oil. Riyadh may tighten its spending or raise taxes, while analyst warns the deficit could exceed $67 billion if Brent averages $62 this year. Holy smokes, what a great article.
No, great article. As you said, we love Irina Slav. But what's interesting is that they're the ones clearly behind driving the price down. And so I get all of these articles coming out saying they're still spending like $90 oil. They're still spending. They've got fiscal break-even prices above 90. Well, clearly they don't care, or they're down to take out debt in order to keep oil prices low. So it is a little bit of like, okay, sweet, but that doesn't necessarily change what they're doing now.
Yeah, it doesn't. In fact, I'm trying to take a look at and writing some articles and figuring some of this stuff out. And I think RT's got one over at the Crude Truth coming out tomorrow on what he thinks is going to be that. So we'll publish that one out there and taking a look at how he thinks the oil prices. He's got a pretty good insight as to what could be balancing out that number.
Yeah. Again, I will beat this dead horse until it and I am dead. I'm tired of hearing about fiscal break-even prices in Saudi Arabia, because clearly they're willing to take long-term pain in order to lower oil prices. Why? We can only speculate, but I will beat that horse till it's dead and I pass out of heat exhaustion. What's next?
Well, before you pass out of heat exhaustion and turn yourself into a nag, Republicans push to refill those strategic oil reserve with $1.3 billion. This will not impact the price at the pump. It won't impact anything, because when you look at how much the Biden administration printed money by ruining it, the proposed bill is a $1.321 billion to refill the SPR and $218 million for maintenance and repairs caused by the rapid depletion of the SPR. Now, again, the advantage that Saudi Arabia has is they think in terms of decades, and the U.S. government thinks in the next election cycle. And that to me is despicable. I would put in here, Michael, that we need to have Congress take the SPR out of the ability of the president to absolutely use it as a political tool and treat it like a strategic oil reserve.
Yeah, I've heard both sides of the argument that the SPR is damaged. I've also heard from people I really trust who I would say are Trump fans that the SPR is not actually damaged and that that's part of the degradation of these salt domes is that it's just going to happen over time, whether or not they're filled or not. So I'm going to throw a little bit of a wrench into the Biden damaged the SPR narrative just slightly. It doesn't help to not have them full, but a lot of this is just degradation that happens over time, considering that these are just salt domes. I do love the fact that we're getting in and purchasing it. To me, this sort of screams that, the Department of Energy, who has been screaming Chris Wright at the top of his lungs that we need oil at 55, he either thinks this is the bottom, because if he thinks oil was going lower, they would probably try to buy it for lower. So this may be a good signal that they feel like this is a quality price, and this quote unquote may be the bottom. I'm not saying it's shooting back up to $80 tomorrow like Stu thinks, but it could mean that this is a floor that we might see for a while. And so bringing out some of this stuff is not a bad idea. I do love this quote from Brett Guthrie. This bill would also begin refilling the dangerously low Strategic Petroleum Reserve. We can all agree it's dangerously low from an energy security standpoint.
Absolutely. And I think it does not need to be used to lower it. Now, Michael, it lowered the price to 40 cents at the pump for consumers for a midterm election. That causes problems.
Yeah, I'm just saying there's this narrative out there that the draining of the SPR caused structural damage to the Strategic Petroleum Reserve itself. I'm calling a little bit of hogwash on that.
Well, let me say that the facts and the people that are in charge say that they can only pull in and out of those salt domes so many times because they are structurally, and that's probably what they're talking about as well too. You don't want to be pulling them in and out. It's not a in and out, turn it on and permanently. It's not a permanent solution in some of those domes.
Yeah, that we can agree with. All right, let's go to our the greatest state in the world, Texas.
I love me some Texas story. Now this one is from Ed Ireland. I love Ed Ireland. This is absolutely wonderful. And I recommend everybody follow edireland.substack.com. And when we take a look at Winter Storm Uri pushed Texas electrical grid to the brink within 4 minutes and 37 seconds from a total collapse. Michael, that's pretty darn close. But the problem in Spain was, Michael, they lost power for 3 seconds. Oops. As power generation failed and electricity demand skyrocketed. Since then, ERCOT, the Public Transmission Commission of Texas, and lawmakers, weatherization requirements for power plants to handle extreme cold passed. And now here's where it gets kind of fun. If you take a look at this quote in here, Texans now pay the highest electricity rates in the South, up 28% in just 4 years, and it's not an accident. We're shelling out, listen to this, Michael, $2 billion a year to cover the reliability costs dumped on us by the wind and solar costs that they should be paying. Next year, over 50% of our reliable power, natural gas, coal, and nuclear, will be 30 years old. Why? Because the market is rigged to favor more unreliable, subsidized generation. This is a huge bill, and I like the way that it's phrased because we're finding out that it's not a good thing to have wind and solar on your grid. There's a place for it, but not on your grid.
Yeah, I can't disagree with anything you're saying. I mean, this is probably something that ERCOT should have done years ago, which is probably, for everything that's great about Texas, ERCOT is not one of the great things about Texas because it is
so much for getting them on the podcast.
I mean, we can have a conversation about how terrible they are at their jobs. I mean, we could be nice about that.
I think they've done a great job, to be honest with you, in many ways. because they're being forced by what the legislature shoves at them. So, when they're trying to balance it out, I don't think that we should be allowing any more projects. And the way that the bills are written, I've kind of gone through them, is that they're going to be requiring wind and solar to be paying for natural gas. Well, there's a problem with the natural gas plant side of things, is because that's just going to add the cost to the consumers. And any natural gas for the next 4 years, natural gas plant turbines are sold out, Michael. We are in a national crisis here, Ro.
Yeah.
So we got to keep these things rolling. The coal plants that are there and everything else.
Yep. All right.
The last
What's
story
next?
here, as I was saying, the last story: can the UK avoid Spain's blackouts, or are they doomed? Following along this one, I loved writing this story, Michael. This was kind of fun. Research suggests the UK needs significant grid updates to avoid blackouts like Spain's April 2025. It seems that investments in transition, storage, and resilience are crucial for £35 billion. The evidence leans to more enhanced grid stability. But Michael, this goes along with the story that we're going to talk about on your segment here in a second. And is Shell and BP going to be moving out of the UK? I would not want to be a oil and gas company in the UK with their policies and everything else. And when you take a look at the overall analysis that I came up with and the planned grids and fast tracking, $4 billion in grid development, Michael, for interconnects with other countries. Energy security starts at home. You cannot rely on other countries for your energy security. It just does not work.
No, absolutely. It's one of the reasons why, going back to our SPR story, it's so important to have something like a strategic energy reserve. I mean, that's really what it should be called, strategic energy reserve, because there are multiple different ways to have this. But no, you're absolutely right. My issue with the stuff the UK is going to do is it's going to turn out to not necessarily solve the problem. They're going to spend a bunch of money, spin a bunch of wheels, invest some tax and subsidies into what? Offshore wind? Shoot me in the head.
No, that means absolutely nothing. And when you take a look at how much money BP and Shell have paid in windfall profit taxes, as we say, I see nothing. I see nothing. How would you like to be in oil and gas? You and I talk oil deals all the time. Okay, is this deal a good deal? Is this deal a good deal? What happens if you took 70 to 80% of your profits and it goes into a windfall profit tax? Oops. That does not make you want to be a good steward of a citizen of a country. Guess what's going to happen? They ain't going to be around.
Yeah, no kidding. Well, let's jump over and quickly talk oil and gas finance too. But before we do that, we've got to pay the bills. As always, thank you for checking us out here on the world's greatest website, www.energynewsbeat.com. Stu and the team do a tremendous job making sure that website stays up to speed. Everything you need to know to be the tip of the spear when it comes to the energy and the oil and gas business. Go ahead and hit that description below for all links to the timestamps, links to the articles. Subscribe to our Substack, theenergynewsbeat.substack.com. A paid subscription is the best way for you to support the show. We appreciate all of our listeners out there. Also, we'd like to shout out friend of the show, Reese Energy Consulting, for all your oil, gas, midstream needs. Guys, if you are in the oil business and you're not working with Reese Energy Consulting, you're doing yourself a disservice, guys. If you're an upstream and you're not working with a marketing company, not Twitter, go to Stu for that. Stu will tell you how to get, 20,000 followers on Twitter by tweeting out the most outrageous things on the planet. When I'm talking about marketing, I'm talking about your midstream contracts. I'm talking about first purchaser contracts, making sure your netbacks are the highest they can be. Reese Energy Consulting can hook it up. The other thing they can do is if you are in the midstream space and you're trying to do any sort of project analysis, you need a red team analysis on a new plant you're going to do. You need a environmental impact study done or any sort of thing around the midstream space, Reese Energy Consulting is your go-to, guys. That's reeseenergyconsulting.com. Tell them Energy Newsbeat sent you, and they will give you a 4,000% discount. That's a joke, but they will work with you. They will work with you. So we appreciate them. That's reeseenergyconsulting.com. And finally, guys, it's never too early to start thinking about your 2025 portfolio. Heck, we're almost halfway through the year. If you are interested in getting in the oil and gas investment space, and more importantly, becoming Billy Bob Thornton from Landman, we have a great ebook that walks through all the different ways where you can invest in oil and gas. Invest in oil.energynewsbeat.com, or hit the link in the description below. It's a great way, again, to be cool at parties and tell people you're Billy Bob Thornton from Landman. It's also a great way to get quarterly or monthly distributions, a little bit of a dividend. We all love a little bit of a dividend. Diversify your portfolio a little bit, but also save on taxes, which is key, guys. That's investinoil.energynewsbeat.com, or go ahead and hit the description below. Stu, markets up huge today off, to be honest, what was basically a capitulation by Trump on the trade deal with China. Tariffs now reduced to 10%, all the way from 145%. So thank goodness we'll all be able to upgrade our iPhones in 6 months. S&P 500 and NASDAQ on this news up huge, or as Trump would say, bigly, up 3.26 percentage points and 4.02 percentage points for each of those indices. The 2 and 10-year yields jumped tremendously, 1.36 percentage points and 2.08 percentage points. So both indices now, or both 2 and 10-year yields, above 4%. Dollar index jumped 1.3 percentage points. Bitcoin actually fell 1.45 percentage points. So there's a little bit inverse correlation there. Crude oil up about 1.5 percentage points. At one point was above $63, has fallen now 61.96 as we record this, about 5 o'clock on the 12th. Natural gas tumbled a little bit, $3.64. Our XOP, which is our EMP securities contract, up 3.7 percentage points, 123.27. Pretty unbelievable, too. That's a 2-week high on the back of the Chinese tariffs being sort of paused. So that's the other thing that happened, basically, is there was a pause of the tariffs, and really their goal is to wind them down to about 10%. We still are seeing some nuclear talks with them and Iran. A lot of interesting stuff going on there. The other thing that really drove markets today, Stu, was the fact that, where was it? OPEC. Oh, yes. OPEC and Saudi Aramco came out and said they actually expect flat demand, which, again, when OPEC and Saudi Aramco come out and say demand will be flat, I take note, because they're in the business of trying to say, no, demand's going up. You know, it's in their best interest. Again, IR guy of the week here. They want demand to go up because that means they can justify raising their official selling price, as I talked about on one of my solo shows last week. So I take note when they say demand is going up, just like I would, or demand is going to stay flat. Obviously, supply is probably going to go up. So that leans to be something interesting.
But do you know why? It's because
that's why I paused and let you jump in.
India is going like gangbusters. China is still buying everything they can for storage because they don't know how the sanctions are going to be going out. So they're still going to be buying everything, even though that they've had a pause on the economy. And with the tariffs now coming back offline, it looks like some folks are going to be going back into work again. So I think that, and I've been saying this for a while, if we see a stagnant or flat China and we see a biggie in India continue on, you will see demand growth there. So I applaud the Saudis in listening to the podcast.
Absolutely. You're now the new chief of staff to MBS, which is great. You went from Russia now to Saudi Arabia. Last thing we got to talk about is a story that you talked about on the Energy Realities. Is Shell sizing up? Biggest power grab yet. Guys, there is massive speculation that Shell is considering purchasing BP, which would be pretty unbelievable. And this comes off the back of some weak earnings by BP. Pretty unbelievable what they're saying here. This basically was run in Reuters right now, and there's this speculation has really resurfaced mainly because of that 5% stake that Elliott Management bought, who's trying to get some premium for that. Stu, if you were running corporate development at Shell, what would your recommendation be to, or I guess, let me see, as the CEO of Shell, what would you think? I'm your corporate development guy. I come to you and say, hey, Stu, I think we need to buy BP for these reasons. What should those reasons be? And what do you think Shell should do in this case?
If I was the CEO of either Shell or BP, I would move. Two answers. I would make an offer to BP before they moved to the United States. And then I would move Shell to the United States. And here's why. They have now gone to 78% tax because of the windfall profit taxes that has been going on. I would, trying to protect my shareholders would make more money if I was in the United States. Now, if I was the BP CEO, I would move to the US before Shell made the offer so that I could get a bid from ExxonMobil or Chevron. And here's why. Because BP has a lot of Gulf of America assets. It has some non-op in Alaska. It has some still in the Permian. And by the way, I worked on a lot of the BHP that sold to BP wells, and I know what those are like. So when you sit back and kind of go where you're playing on this, it's a twofold question. If I'm the CEO of Shell, I would say I need to do it and then I'll move. But if I'm the CEO of BP, I move so I can get another bid and put a bid war going on to really increase the value of my company.
No, absolutely. I completely agree with you. It'll be interesting to see because the U.S. also gets, being listed on a U.S. stock exchange also gets a little bit of a premium. So if Shell waits for BP to reorganize in the U.S., then they have to pay U.S. stock market quote unquote premium prices. But the question is, if they do it before BP reorganizes, do then they have to pay even more of a premium to match a so-called U.S. Be very interesting, but I love where your head's at. Completely agree. What else, Stu? What else should we be thinking about?
Well, I mean, we got a lot going on in the world right now, and I just finished up a podcast that'll be released tonight from George McMillan on what Putin's doing for President Trump. It's actually kind of an interesting take. So I'll tell you what, President Trump needs some help.
He needs some help. He needs great people in there, and we appreciate you keeping us informed with that. But Stu, we're going to have to let these people get out of here, get back to work, start your day. We appreciate everybody checking us out here on the world's greatest podcast, sponsored by www.energynewsbeat.com. For Stuart Turley, I'm Michael Tanner. We'll see you tomorrow, folks.